Last year, the IRS uncovered $2.3 billion in tax fraud. Experts worry this could worsen as more Americans opt for electronic tax filing. McAfee's 2021 report shows 63% plan to file online, with 12% being first-timers. Terry Hicks of McAfee warns of scammers exploiting this, often targeting stimulus checks. As we embrace the convenience of living our lives online, it makes sense to take a few steps to protect ourselves, says Hicks, emphasizing the importance of taking proactive measures to safeguard personal information in the digital age. He also emphasizes the value of prevention over correction when dealing with potential security threats. But how can you shield yourself from falling victim to these scams? Before we continue, if you're new to this channel, please make sure to subscribe and press the notification button so you can be notified when we upload new videos. Here are 5 ways to help reduce the likelihood of being a victim of tax scams this year. Number 1. File early. If you haven't filed your tax returns already, prioritize getting them in as soon as possible. The sooner you file, the less time a fraudster has to file a false return in your name. Early filing of your tax returns is a preventive measure to protect your financial security and personal data. Identity theft is a severe issue, and tax season offers fraudsters a window of opportunity to use stolen information like social security numbers to submit false tax returns and get refunds before the rightful taxpayer has a chance to do so. Terry Hicks describes this approach as preventative care for your taxes. By filing early, you create a barrier that makes it more difficult for hackers to impersonate you and file fraudulent returns in your name. On the contrary, you must act right away if the IRS marks your return as duplicate or indicates that you have already submitted it when you try to file electronically. This can entail filling out and filing the IRS Identity Theft Affidavit form, which is a crucial step to make things right and shield yourself from more damage. Number 2. Look but don't click. One of the more common methods that fraudsters use to get information is email phishing attacks. Be wary of unsolicited emails claiming to be from the IRS or other tax-related entities. The IRS does not initiate contact with taxpayers by email to request personal or financial information. Email phishing scams. Taxpayers are not contacted by the IRS via email to request financial or personal information. Usually, companies send paper bills via regular mail instead. Any communications claiming to be from the IRS, Treasury, or other tax-related organizations should raise red flags for taxpayers, particularly if they ask for private information. Phone scams. The IRS usually gets in touch by mail first, just like with email phishing, especially when it comes to tax bills. The IRS and its approved collection agencies will not issue wire transfers or prepaid cards as a means of payment. Issue urgent or threatening messages or threaten to cancel licenses or arrest you. Caller ID can be manipulated by scammers to make it seem as though they are calling from reputable locations, such as IRS offices or government agencies. If you don't owe taxes and you receive a strange call from someone claiming to be the IRS, hang up right away. Verification of tax owed. By logging into your tax account information online at irs.gov and looking at your available payment methods, taxpayers can confirm the amount of taxes owed. People can guard against falling for fraudulent schemes and tax-related frauds by being alert according to these tips. Number 3. Watch URLs closely. Be cautious of misleading domain names and URLs that appear legitimate but may lead to malicious websites. Email phishing is a common tactic used by fraudsters to fool victims into disclosing personal information. They pose as friends or retailers and send fake emails requesting personal information, including links to fraudulent websites. Although these frauds occur often, they particularly tend to happen during tax season. Scammers may, for instance, send you an email requesting that you click a link to view your tax return. Hicks warns that you should exercise caution when opening any unfamiliar emails. Avoid opening attachments or clicking any links in these emails. Tim Sadler from Teshen suggests that you verify the email address even if you know the sender's identity. Scammers may alter the email address but leave the display name unchanged to make it appear as though it is from someone you know. Recall that the IRS will not send you an email. Typically, they only mail when something is wrong. Thus, it's probably a fraud if you receive an email claiming to be from the IRS. Number 4. Don't trust IRS calls. Scammers often impersonate IRS officials over the phone. Remember, the IRS generally first mails a bill to a taxpayer who owes taxes. If you receive an unexpected call claiming to be from the IRS, do not give out any information and hang up immediately. These common tax scams involves fraudsters posing as IRS officers and pressuring individuals into paying an allegedly past due tax debt by threatening to jail or deport them. Due to its widespread and harmful nature, this scam has been classified by the IRS as one of the dirty dozen tax scams regularly. In previous years, scammers even faked the phone numbers of official IRS departments, such as the Taxpayer Advocate Service, to give their calls more legitimacy. These were fraudulent attempts, even though caller ID showed them as legitimate IRS calls. It's crucial to remember that the IRS never requests immediate payment over the phone through recorded messages or with prepaid debit cards, gift cards, or wire transfers. If you are in debt with your taxes, the IRS will usually start by sending you a bill. Be cautious at all times and be sure that any correspondence claiming to be from the IRS is legitimate. Number 5. Make your social media profiles private. Scammers may use information found on public profiles to answer security questions or trick you into revealing sensitive information. Social media attacks are growing more common as scammers make use of websites like Facebook, Instagram, and X to obtain personal data. Once they have access to data, hackers can try to access a variety of accounts, such as banking websites and IRS e-file profiles. They might use strategies like figuring out security questions or gathering enough details to create a convincing impersonation of the person. To avoid getting scammed, make sure that your privacy settings are prioritized. Restrict the quantity of private information you disclose online. Moreover, stay away from using information that is simple to figure out, like pet names, in passwords, or information that is disclosed to the public, as this can make it simpler for hackers to access your accounts. In addition, make sure your tax preparer is verified by the IRS, and remember that staying vigilant and informed is your best defense against tax scams. Thank you for watching. If you're new to this channel, please make sure to subscribe and press the notification button so you can be notified when we upload new videos.